Yes, good evening, everyone. Welcome to this video. So, my name is QB. A lot of guys know me as Paul, others know me as QB, but wherever. So, today I'm going to be trying to dive into just a little bit of the secrets of price. How you're going to be in position to identify a specific area within which price is going to be lying into. How are you going to be in position to get to utilize that overall insight that you have to take advantage of the positions or the movements within the market. Yeah, so I'll quite of start from the highest time frame, which is the weekly time frame. I'm not so much going to dive into the basic things regarding psychology. I'm not necessarily talk about risk management. This video is for the most part intended for the skill set. How you're going to be in position to realize specific areas within which price could basically land into, so you can take advantage of those opportunities that the market might present. Yeah, so starting off right now, you very much well can see that this is a CADJPY chart. So this is CADJPY. So if you are to try to look at basic price, mind you, by the way, there's a lot of people that do not believe that certain principles about price actually exist. But what you need to understand is that all those deeper secrets that people try to figure out within the market are trying to cater for those that may have extremely smaller balances. You understand? But if you have reasonable equity to your trading account, you can actually place your trades and hold them, you know, to wherever they might be going to, as long as you bought or sold within a key price point. So out here, I'm not going to be diving into, special trading systems, but I'm just going to be clear with price, like overall price, in that even if someone is literally beginning, you can be in position to utilize this video, understand, and learn something from it. So whilst trying to land within the overall concept of price, we're going to have our focus based off of key levels or price turning points, and those levels are always going to be levels of support and levels of resistance. So for instance, right here, we have a key level of support. Mind you, this is a weekly time frame. So this is support. Okay, this area is going to be a key area of support. So the next underlying area, let's say above here, will now kind of like be a resistance area for that matter. So this is going to be my resistance. Sorry about this. It's going to be resistance. So that's my resistance area currently here, because you could see wherever price was around here, it came back into this region from the level of support, then bounced off to the downside, found support again, pushed to the upside, now all the way finally into this final resistance zone. So in the literal understanding of things, that's how price is actually trying to play out. But mind you, if this is a very high key time frame, and for the most part you're always going to listen to me talking about these things, for those of you guys that are going to be watching these videos, they are more of like educative to kind of like exhaust whether you're trying to use whichever system you may be using. There are certain levels of price in that if it is considered as a high key level price point, whether you're using which system, price will act accordingly. Be it SMC, be it you're using Ichimoku, like those indicators, be it you're a person that uses the Elliott wave, be it you're a basic support and resistance trader, be it you're a supply and demand trader, be it you're someone that uses, let's say, the QM model of trading, the Quasi model, and all those things. So whichever system, you have to take into consideration these key price points that I'm going to mention out here. Basically, someone will always be looking into understanding price within the basic concepts of support, overall support, and resistance. So for instance, if we have price flowing within this specific area, we're going to be having price moving off of a key level of support, diving all the way into resistance. So in resistance, we expect to be selling, so price ties all the way down to support, where we're expected to buy because it's a support area. You buy low and sell high. You buy low and sell high. You buy low and sell high. Then until price lands into an area like that. So let's say price stalls within this area, whichever area that's going to be below, like let's say around here, this area is going to be an area of support, or can be termed as the flow of price. Okay, it's the flow of price. Other people are going to term it as demand. I can also call it demand because we buy within areas of demand. You understand? There must be existing demand for you to take a specific buy. There must be demand for a specific commodity from you, the person that wants to buy it, if you're going to buy it. If you don't need it, the demand could depend on the fact that it's either a necessity or a need, but either way, the demand has to exist if you're to purchase or buy any commodity. And if you're trying to sell any commodity, there must be supply. You understand? There must be people willing to buy from you, so you sell to them. You understand? The commodity. So the overall concept of supply has to fall in line as well, so that you can be positioned to sell the specific commodity. And whenever you're trying to sell something, you wouldn't really want to sell it cheaply because you're not going to get any money from it. You would rather buy cheaply so that you don't incur extra costs. But when you're selling, you have to sell expensively so that you can get a reasonable amount of money from whatever you're trying to sell. You get. So those areas within which we sell from, or the high points of price, are going to be areas of resistance. Most of you guys know this, but it doesn't necessarily mean that you don't really have to watch this video, because the video is intended for each and every one. Whether you trade, whether what, I'll be diving into certain concepts that you can incorporate into your trading style, and they'll always help you. I know a couple of guys already know about what we call psychological levels in trading. Now, some of those psychological levels kind of lie within the areas that I'm going to try to mention. At a certain point in time, it may not necessarily be a psychological level, it may be close to a psychological level, but it will be a high price point or a high key level price point. So, areas within which we sell from are going to be areas of resistance, or I could call it the ceiling, or someone can call it the roof of price. So that these are terms that put out there for someone to kind of like get to understand basic price. So this is the overall concept that we'll be trying to relate with entirely. Even if price is going to be moving dynamically, like at angles, you see price moving at an angle like that, and it's going to have the same orientation whereby we buy from support, price gets into resistance, we sell. It comes into support, we buy, gets into resistance, we sell. Comes into support, we buy, resistance, we sell. If it breaks, we retest, then we continue all the way down to somewhere like here. Now, these are some of the passes that you guys are going to be looking out for, like oftentimes. Similarly, if we had one where the market was diving down to the downside in what some people call a trend line. So if we have a trend line, the orientation is going to be the same. You always buy in areas of support, price gets into resistance, you sell. You buy from support, price gets into resistance, you sell. You buy from support, price gets into resistance. If it breaks this resistance area, what was resistance becomes support, so price starts pushing to the upside and eventually lands into an area like this. So these are the overall basics, and anyone that I've taught before, anyone that has seen me, try to teach or mentor or whatever, you're very much well aware that I kind of like have to dive into something like this. So this area where price would be diving in still is going to be an area of support. It's going to be an area of support because this is where we started having the spike of price from. Then this area here is going to be considered as, I could term it as a support trend line. So that's going to be our support trend line. So that's a support trend line. Then this one would be now the opposite, which is a resistance trend line. So that's our resistance trend line. So this one pushing to the upside is an area of resistance, but you could see it's kind of like bent. I could say that I kind of like have an angle around here. Call this angle, let's say 45 or whatever. It may not necessarily be accurate, but let's say that's 45 degrees. So this price point that I would term as support, or the above price point that I would term as resistance, is bending, but the orientation still remains the same, and we consider it as this. So this is an area of support. Your price starts pushing up from, pushes into an area of resistance within a trend line. So this is a resistance trend line, this is a support trend line, and now this type of trend line is called an upward trend line or an uptrend. So this is an uptrend. Okay, the whole of this, as prices push into the upside, is termed as an uptrend. So when we come back to this one as well, we're still gonna have support trend line, which is this, wherever we are buying from. Then we're going to be having a resistance trend line, which is this, wherever we are selling from. Then this is now going to be a downtrend. Okay, that's going to be a downtrend. So before I even proceed, these insights are always important for you to always relate with. They'll always kind of like give you that guidance entirely. So this is going to be a down trend. So this is a downtrending market. You get when our prices dive into the downside, that's a downtrend. And we'll go deeper into other concepts, but right now I may not necessarily have to go over them entirely. Maybe try to come and try to look at what I was trying to get to explain out here. So you have price flowing within areas of support and areas of resistance. But now the funny part now for the guys that are actually trading, what happens on a higher time frame? Yes, you could consider these areas of support and resistance, but now whenever we are at we're within a higher time frame, what you're trying to consider is rejections according to the week. So still within basic price action trading, you're going to have price being represented by what we call candlesticks. So the candlestick can either be bullish or it can be bearish. So we take this to the other side. So let's say I'm going to denote one as bullish and I'm going to try to denote the other as bearish. So if it is bullish, I could give it a color. That color is most probably green. So let's say my green candlestick is the bullish candlestick. I could increase the intensity. Pay attention, there's something I want to put across out here. So this is also green maybe. Then this would be maybe my bearish candlestick. So bearish representing sellers, weakness is going to be red. Okay, it's going to be red. So that's my bearish candlestick. So now whenever we're trying to look at price, our emphasis should always be on these key price points if it is a higher time frame. So for instance, this specific higher time frame is a weekly time frame. So now whenever we're trying to look at areas of support, there will be the lows and the highs of this candlestick. So for this green candlestick, its low point will be this and its high point will be that. For the red candlestick, we're going to have the low point as this, okay, and the higher point as this. You get. For those of you guys that are going to keep on watching these inside videos, I'll always keep on decimating price in this kind of regard. So you have it like that. So when you come to price here, everybody is telling you to look at key resistance areas or key support areas, but the underlying thing to always point out or try to look out for are the wicks. So for instance, when you look at your CADJPY for this specific time, you had these wicks. I could mark that, this very one, okay, sorry, I could mark that as my key wick area. Then I could also mark the low point. So notice before this candlestick pushed to the upside, it first of all open. You need to understand the orientation of these candlesticks. Each of these candlesticks has an open price, a closing price, a high price, and a low price. You understand? So let's try to denote how the movement or the orientation of the green candle happens. So you have this point as my open price. So price opens from this specific point. Then it drops down to create a low point. Okay. So this one right here is going to be my low point for the bullish candlestick. So as it creates the low point, price will now push all the way to the upside. It opens from here, drops down to create a low, rejects, maybe because of previous support this side, rejects and pushes to the upside, creates a high. So after creating this high, then price will come out here and close. So price is going to come here, close. So price comes into that area and closes. So it opens here, pushes down to create a low, pushes down to create a high, comes and closes here. Okay. So that would be it. So even when you come out here, the orientation is going to be the same. You're seeing these two candlesticks on CADJPY. On CADJPY. Sorry about that. So you have this low for the red candlestick or the bearish candlestick. Price now the opens are different and the closes are different. The highs and the lows may necessarily be the same, but if you try to look at both of these, have, let's say, a different high and a different low point, and they have a different close and a different open point. So if I try to expand, yeah, so when you come now to the bearish candlestick, it's also going to be having its low point. The low point is going to be this area here. So this is going to be its low. So that's its low. Then this would be the close because the bearish candlestick closes from below. So I can copy this close and just join it all the way down. So this is its close. Now its open is going to be the opposite of the other one. So the open will be above, pushes to the upside to create a high point. Okay, because there's resistance, then rejects all the way down, passes the open, comes all the way down, finds a low point, then comes and closes. So the same thing is around here. So when you look at CADJPY, this previous move, we're going to try to study price. So price closed previously here, and that's where price opened from. Okay, wherever the previous candle closes from, that's where the next one is immediately going to open from. So price had closed here. The next week, what happened? Price opened from here, dived down all the way to the downside, slid through this low. You could consider this weak, but then you see there's another week all the way down here. So price looked for the lowest week. Okay, picked it all up and pushed for this bullish move. So now, if someone could recognize this area, this is our key level price of support. So if I could mark it like that, get back to my colors, grayish. So if I could mark this as my key support area, and I go to a smaller time frame, try to reduce the intensity. And dive down to a smaller time frame, you're going to find that this was a key level price point. However, someone would have entered around here because you're looking at a good risk to reward trade. Coming back to explain this, but let me first dive down and show you how that transpired. So if I go to the H4 time frame, whatever everybody is looking at as key level support or whatever, so this is where the entries would have been. So someone could possibly have had an entry around here for a long all the way to the upside. So your entry is there. You have a target. These moves push for as high as 500 pips or even more. So the stop loss is usually 50. Doesn't necessarily mean that your stop loss is going to be hit, but that's how the entry would be. Then you target highs. Average moves would be 150 pips. So if you have 150 pips, you could choose to exit because that's already a 1 to 3 risk reward, which you get. So we go back. So if I come back to the weekly time frame just to continue decimating this a little. Okay. So now we're trying to look into the previous, this current week. So what happened? Price had closed here, but it had left a week above and we had another underlying week here. So you always have to choose which is the most favorable price that you'd expect price to dump into. And then you leave the rest with the stop loss to kind of like cover you. So that means that entry would have been at this level. Then take profit is usually 150 pips. Let's see price hit it. So price actually gave the 150 pips, the average, but the maximum is usually 600 pips. So where am I looking at CADJPY? The only area I would look for to buy CADJPY from significantly would be this area around here. Yes, there might be buys that may happen in between there, but those are not the necessarily strong moves that you're trying to look out for. So as you could see, if someone had a sale around here within that specific area or price point, and you had your stop loss slightly above, stop losses are usually 50 pips. So entry point is at this area. You have a stop loss of close to 50 pips. Then you target 150 pips initially, but like I said, this moves drop for as much as 400 or even more. So currently, because of this move, I could expect maybe USD CAD to continue. If it is going to continue, the best area to buy from would even be as low as these areas, but then we have these underlying ones. But looking at the structure of the market and how everything is trying to flow, it can't surprise. It may not necessarily surprise you if price comes all the way down into these areas. But what are we looking for? We're looking for a good catch. You have 50 pips, so you have 150 pips. So even if it's 100, that's already enough for you, and you can exit that trade because you already have a 1 to 3 risk reward ratio. So you're going to let me know in the comment section so that you understand this. If you don't, then we dive into something simpler. If you're interested in trying to get to understand it more, still you can write in the comment section. And maybe in the next video, I could come and hit out on it. But all those other setups, if I was to go over like any other trade setup, any pair, the orientation will be built around still that same thing. For those of you guys that are in our Telegram group, that are Broker Services Telegram group, you might have seen an entry I shared for USD CAD. It had pinpoint accuracy. So someone may not necessarily have understood as to how I did take that trade, but that trade was taken within that trigger. Yeah, so basically that's it. You're going to be coming down here to this Telegram, to this YouTube channel to look out for most of the insights that you keep on sharing as to how you get to take trades. You get to increase your level of profitability or professionalism within the market by using extremely good pinpoint accurate systems. Yeah. So I guess that's it. You guys have a good evening. We'll see you in the next video. Don't forget to subscribe and link up the comments within the comment section of what you think about the video. Like I was saying, if you feel like there's anything lacking, you can write in the comment section. If you feel like there's anything that you didn't understand, you could also try to write it down into the comment section and be in position to kind of like get to help you. So basically, that's it, and see you guys in the next one.